Welcome to Affordable Foundations, Legacy Impact Through Housing, the podcast that explores how housing shapes communities and creates lasting legacies. I'm your host, Cecilia Casio, and each week we'll dive deep into solutions, challenges, and opportunities in affordable, attainable, and workforce housing. From current housing models to innovative approaches reshaping the industry, we'll explore the policies, investment strategies, and community-driven initiatives that are making a real impact. Housing isn't just about buildings, it's about people, opportunity, and the future we're creating together. We believe everyone plays an important role in affordable housing, whether you're a real estate investor, developer, policymaker, property manager, or someone passionate about creating positive change. Affordable Foundations is your go-to source for insights and inspiration. So let's break barriers, redefine possibilities, and build a legacy together. Today, we're diving into the financial side of making affordable housing a reality. I'm here with Derric Hicks. Derric, let's take a moment to introduce you.
Good afternoon. How are you?
Good afternoon. Thank you. I'm good, thank you.
Good.
Tell us about yourself and what got you into this CDFI.
Sure. So I am a recovering banker. I have been in the financial services field for the last 24, 25 years. Started out in your traditional retail, then commercial banking space. But I've spent the last 10 plus years really focused on Community Reinvestment Act commercial focused lending, right? Trying to create capital access points for women and minority owned businesses, underserved communities, those that are undercapitalized. So at Legacy Texas Bank, they were going through a merger. I was given the opportunity to begin building a program. We incorporated financial literacy training programs. We incorporated special purpose credit programs, et cetera. And from that point, kind of grew that, went to Comerica Bank to, again, develop out the southern side. And as a part of that service, I was working with Texas Mezzanine Fund on their loan committee. And when the outgoing executive mentioned that he was looking to retire, my name was added to the list. And I was fortunate enough to get the opportunity to come aboard and run the shop.
Awesome. You know, our podcast is about real estate. It's about giving information to those in the multifamily industry. But you guys also work on business loans and helping individual business owners. Let's start with that, because we do have people in our industry that would love to hear how you guys might be able to help them.
Sure. So Texas Mezzanine Fund is a 25-year-old CDFI, or Community Development Financial Institution. We focus on lending to small businesses into the affordable housing space for creation, development, and to community facilities. Same thing, either purchase, creation, development. For our small business owners, we try to figure out how do we help them solve their financing needs, whether or not that is business acquisition, whether or not that's equipment financing, permanent working capital, et cetera. We listen to what their need is and then try to figure out whether either directly in tandem with other CDFIs or other lending partners like traditional commercial banks, how we can create the capital that they need to continue to grow their business.
Okay. All right. Now let's go into the real estate side. How could somebody like you guys help me on a project?
You know, my two favorite words in the lending space are "it depends." Right? So that's right. No, that's as a former banker, I think that's where it all kind of starts. It depends, right? A lot of it depends on your individual scenario. So if it helps, I can tell you about a deal structure that we built with a local bank to show how CDFIs can work in this space. Is that okay?
Absolutely.
So we had a developer who was looking to build a $3 million project in Southern Dallas. They had 10% of cash and land equity, right? So $300,000. And the bank wanted to be at 70% loan to cost, right? $2.1 million. So we've got a shortfall. The structure we proposed was to come in and say, we'll do 30%, okay? From the second lien position, bank, you've now been reduced down to 60%. So their risk has been lowered, reduced. The developer still comes to the table with their 10%, and we're in second lien position at 30% in a capital stack. We then will lend first through the pre-development phase and a lot of the horizontal work, and the bank gets an opportunity to come in on the vertical phase. The bank then was able to take a higher percentage of repayment on the first two houses being built. So their risk is being mitigated at the front end and being reduced as we go through the process. And you now take a loan that was not going to be able to make because the developer didn't have enough equity into a structure that is not only now approvable, but actually potentially advantageous to the bank because they generate affordable housing in an underserved community. They partner with the CDFI, thus fulfilling their CRA missions and requirement. And the developer still gets an opportunity to come to the table, get their project off the ground, and now you have potentially the creation of new affordable housing in the southern sector. So that's what we do. Our approach is to try to figure out what is the alchemy needed to get a project to yes from no. Right. And sometimes that's us directly. Sometimes that is partnering with other CDFIs. Sometimes it's referral to other CDFIs. But our goal is to try to figure out how can we be a partner to the borrower to help them get their project completed.
And do you focus in areas that predominantly serve those underserved communities? And how do you guys determine that? Is it by zip code? Is it like if one of my partners said, "Hey, I'm looking in this area," and I said, "Well, why don't you go to see Derric?" And what do y'all look for?
Yeah, as a CDFI, 60% of our work is required to be in what we call CDFI eligible census tracts. So there are different mapping systems that we utilize to look up zip code to see if it's a low to moderate income area, is it high minority area, things like that, to determine whether or not this is an eligible project. We have the ability to do standard as well, but we try to focus our funds, given that we have limited funds available,
right,
into the majority of the projects that are going to be CRA or CDFI eligible. As such, over 90% of our projects typically fall within that space.
Yeah. I think that's important for people to understand. And so, our audience sometimes doesn't understand all the terminology that we use because
CRA, yeah. It's a banker thing. That's all right. So CRA, right? Community Reinvestment Act.
Yeah.
That was the one that required banks to make sure they were lending dollars into the same areas that they were pulling deposits from. Historically, there was, unfortunately, redlining where banks would say, we will take your deposits, but we will not lend to those zip codes of those areas, draw a red line on a map, and we're not going to touch it. CRA was built to combat that. And so banks have requirements to lend into those spaces. CDFIs are not regulated the same way as banks. The majority of us don't take deposits. So our focus truly is to try to figure out how to create additional access points for underserved communities.
Okay. And currently, with our current political climate, how has that impacted what you guys do?
Sure. I'll say this first. We are still committed to making sure that we drive capital into communities of need. Now, the current environment, given the focus on things such as diversity, equity, and inclusion, language that includes helping those spaces, there's a lot of fear that's currently out there. You'll see organizations that are beginning to kind of streamline their language, versus saying Black and brown communities. Some will say just underserved communities or, communities that are undercapitalized, things like that. So as not to make their institutions a target. The mission is still the same, though. It's just that the environment now has created fear.
Yeah.
Right? People are wondering about their funding sources. We are a for-profit organization, so thankfully we don't rely as heavily on grants and donations. But for those organizations that do, if that capital stops, that's their operating capital. That's their ability to lend. So there's fear now, uncertainty, what's happening, what's not. Is the freeze going to happen? the judge blocked it temporarily. Is that going to come back? How not to make yourselves a target, things like that. So there's a lot of fear and uncertainty. And we're starting to see even scenarios where certain banks are asking questions. Well, if I make a loan to your organization and this loan at some point down the line no longer becomes CRA eligible, do I have the ability to claw back? Do I have the ability to stop funding you? So as a institution, we're having to look and see what are our funding sources. What is the mission focus of our partners, our bank partners, our clients that we lend to? Are they exposed to federal housing grants or, potentially Department of Education's voucher systems? So those are things we're all looking at, and we're still mission driven to create the capital access, but everyone is stepping cautiously right now.
When I look at, what you guys do, I think about, wow, what are the challenges that you guys come across out there? And what are some things you do to overcome them?
Sure. So a lot of times in this space, we may work with borrowers who are not yet bank qualifiable, right? Either because there are credit challenges historically, either because there's not enough capital, like the situation I gave you earlier, under collateralized, things like that. So our space is to try to work with those borrowers to figure out what do they need and how can we help. Sometimes it's a conversation, right? It's, the way you've been running your business historically, you're not showing enough income to service the debt you're trying to acquire. Take a look at how you're running your organization, give it another 6 months, that kind of thing. It could be credit challenges. Sometimes the financials need to be cleaned up. So they don't have a bookkeeper, they don't have an accountant that they're working with. So a lot of times we kind of start with, tell us what you're trying to achieve. We tell you where you are based on what we see. And then partnering together either directly or through, like I said, third parties to help them get to a point where they're able to approach us for financing and having a good shot then at that time to be able to be approved.
Right. Yeah. Well, thank you. What upcoming projects or initiatives are you most excited about that are happening right now?
One of the things that we're really trying to do is, there's been a large focus on green initiatives. And so we are in the process of building out a green loan program that will allow for either in the process of development of affordable housing or facilities, to give credit to solar, to give credit to water recapture or energy efficiency that, says, well, we can then say, we'll give you a longer amortization, or we'll give you a discounted rate, or we'll reduce the origination fee or something to allow that borrower to reap the benefits of trying to better their community. So we're building that right now. We've got a framework for it. Should be having a conversation with our loan committee here within the next month or two, and hopefully have it ready to roll out later this year.
Wow. How about that 3D printing that I've talked about?
Yes. 3D printing. There's a lot of conversation now around financing utilizing either 3D printing, or I'm trying to remember. There was another structure that, a lot of build to rent right now. So, people trying to find creative ways to do things to either reduce costs or create, better income streams. We're open to the conversations. We haven't financed a 3D printing structure yet, but maybe if you get yours up and running, maybe that'd be one of the first ones we can look at. But happy to consider different structures that will bring more affordable housing into the state. It's needed.
Right. It absolutely is. We see the challenges on our side on a daily basis. And I think with programs like yours, where investors and operators, when they can get an opportunity to get their foot in the door and not have to go through your traditional bank process, because that can be very tedious. And I'm not saying your process isn't tedious. I don't know what it is or it isn't. But the fact that there are factors that you look at that typically somebody who is in an underserved community may come up against, what it sounds like you do could be very helpful and open doors that maybe wouldn't have been open before.
True. Yeah. I mean, again, every organization has a slightly different philosophy. So I tell borrowers, have conversations, right? Talk to people who are in the space and finding a partner that works. When I always say you don't walk into a mall and the first person you see, you ask that person to marry you.
Right.
You don't know them yet. You don't know if they like you. You don't know if you have the same hobbies, habits, interests. Same thing happens with banking or any financial partner that you choose, right? You could go out and have great deposits, great relationship, want to finance a hotel, and that bank says, we don't do that. And it's not what they do.
Right.
That lender just may not be focused in that space. So, I always encourage my borrowers to, one, go out, talk to a variety of different people, talk to a variety of different lenders to find your fit. Once you find your fit from an institution standpoint, make sure you find your fit from an individual standpoint. Your loan officer is your representative. You need to feel comfortable with them. You need to feel like you can share and talk and discuss your plans, and that they hear you and then will represent you when they present your structure to their loan committee. So one of the benefits I feel of working at a CDFI is that we have more capacity to take that time to get to know our individual borrowers, talk about the things they're trying to achieve, help them review their business plans, look at the debt service coverage ratios, explain what that means, explain what we see, how and why, and then help them go through the application process to hopefully try to get to an approval.
So do y'all work on the underwriting with your potential borrowers, or is this something they got to bring to you guys, and then you will say, yeah, this doesn't work for us? Like, how's that process? If I have a building and I say, hey, Derric, I want to present this, what is it that you, and I know it depends.
It depends. See, all right. That's what yes, right there. Yes. It depends. Truly, it does depend, right? So let's say if you have a structure you're looking at, you bring it to me and you say, hey, I think I want to finance this way. I can look at that with you, and based on what I see from a market standpoint, how you built your pro forma, the rate that you've put out there, I can say this looks good. Or, hey, we may be able to do this, but I may need an additional 10% equity injection. Is that possible? We may be able to do this, but we may want to separate this out into two separate tracks. Or for a lot of our developers that want to build housing, I want to build 10 houses, but I haven't done that many on my own. Okay, well, let's build 3. And once you have contracts on 2, then we can begin to build 2 more. And we phase it out so that they don't take on too much debt, especially in an uncertain market, that kind of thing. So we try to work depending on the situation, to find a solution that works for not only our organization, but specifically for the borrower.
Okay. Now, are your interest rates, are they competitive with?
Oh, man, guess what? It depends. No, every funder has a different source of capital. Our philosophy has been to try to make sure that our rates are at or near bank rates, sometimes slightly above, sometimes slightly below, but we don't want to be punitive, right? We don't have a prepayment fee or prepayment penalty. So if you come with us and you find a bank at some point later that will give you a better rate, please. We are not here to compete with banks. We're here to help encourage you to be bankable.
Right.
And like I said, we partner with banks. We have shareholders, our shareholders are banks. So we want to make sure you're bankable. So if you have an opportunity, go for it. But we try to build our interest rates as such that if you want to establish a long-term relationship with us, you can.
Yeah. Do you guys just work on acquisitions, or do you work on refinancing deals as well?
Refinancing deals as well.
Okay. All right.
Yeah, we did a deal a little over a year ago for student housing where they were looking to refinance it, take some equity out to put some additional improvements into the project. Our rate was 1.5 below what the bank rate was at that time, and we were able to get the deal done. So,
y'all heard that.
No promises. Every scenario is different.
It depends.
It depends. Exactly. So it depends. So
yes. So it depends, people. how you envision the future of community development financing evolving in the next few years.
Man, guess what the first two words I'm going to say?
It depends.
There you go. No, it really does. There's a lot of uncertainty right now, as I mentioned earlier. A lot of fear. People are trying to figure out what this new climate means for the community development space long term. But what I can say with certainty is that the mission and work will continue. Whether or not that means we don't rely as heavily upon grant dollars, but we find private foundations and private organizations that are mission driven and want to see capital be placed in the market. Whether or not that is individual collaborations with other organizations. So as an example, I had a call earlier about a project that could potentially be a syndication between 5 different CDFIs. If we can work together using our own existing capital sources to help, this was a student housing project, to drive this opportunity, maybe we don't have to depend on the banks or wait for the banks while they're working through this period of uncertainty. We can still get the capital out to the communities that need it based on collaboration. So the community development finance work will continue. There's still, like I say, some uncertainty as it relates to how it comes from a federal funding standpoint, but we'll figure it out. The individuals that work in this space are driven to make sure that the good work happens. So we'll figure it out.
Yeah, that's where there's passion and purpose and why. And
it's interesting working in this space, right? I remember when I started in banking, and I would kind of lean back on watching the experience that my grandmother had. In Mississippi, to see a Black woman walk into the bank and have presence was a rarity, right? There's so many factors that would hold you back. And watching my grandmother, who not only had her master's degree, but could go out, she, owned land and all those things, and was able to walk into a bank and have these conversations, and the banker treated her with respect. When I moved into this space, I wanted to be able to give that same level of relationship and connection to my clients, right? So I thought when I first started in commercial banking, helping business owners gave me that. Once I moved into the space of community development, the CRA, it took it to another level, because you realize there's so much work that you can do that builds people, builds communities. And I go to sleep every night feeling good that hopefully I helped somebody that day and the work we did mattered, right? I've talked to people 8-10 years later, and they're like, thank you for just believing in me when I was trying to get my business going, or thank you for talking to me with respect, even when I didn't have anything. And this work matters, and I absolutely love it. So it's been great.
Do you have any other success story you'd like to share that relates to what you just said? Because I think people can really relate to those kind of impactful connections where they hear like somebody else was able to come into this space because of the CDFI, so maybe I shouldn't give up.
Yeah, it's the stories bounce around your head, but I remember one that really hit me. So, as I mentioned, one of the programs we built at the bank beforehand was a financial literacy training program. And we talked to our business owners about how it worked, how capital access worked, how, as I mentioned, debt service coverage ratio worked and things like that, and just really dove into the hows and whys, and making sure business owners knew that it was okay not to know everything, right? It was okay to maybe have done it wrong at first, and now they were trying to correct those things, or it was okay to maybe not have had the best accountant or the best process, or your business plan wasn't perfect, right? Because we're all still learning. And we had a guy that stood up and said, I just want you to know that I had given up on banks. I had given up on financial institutions actually trying to care. And by going through this program, I actually believe now that there are still good people out there willing to help. And that, for me, made it make sense. It made it real, tangible, right? So there's a lot of stories about people who are like, nobody else would help me, and your group did. We've got a small business now here at the CDFI that we were the first ones to give them a loan. They got turned down by every bank in town, and now they are a successful local franchise with multiple locations all across the state. And our organization, even before I got there, was the first one to give them a loan. So, looking at that, where you can see a business that's now in place for 20 plus years, and your group was the only one to believe in them, or the first ones to believe in them. That makes you feel good.
That's legacy impact, listeners. It is. It's where that really makes a difference far beyond what the eye can see. And that's what matters.
Yeah, no, truly. And one thing I'll say, I came into an organization that had been here 25 years. Mm-hmm. As I mentioned, we're lenders, and we're also CDE for new market tax credits. So CDE, Community Development Entity, sorry, acronyms, banker speak. But seeing some of the projects that have been done, like the San Antonio Food Bank, the North Texas Food Bank, Dallas Park South YMCA, Paul Quinn College, seeing programs like that or structures like that have real long-lasting impact, and people are being helped out, and your organization helped create that opportunity, yeah, it matters. So I'm very thankful to the leadership team that was here before me for the work that they did in allowing this organization to be what it was when I came in.
Yeah, that's rewarding.
Has been, truly.
What advice would you give to new entrepreneurs that are into this space? I know we talked about what they could do and all that, but like one of the things that I see is not really knowing like how to do how to register their business through the state, how to create an LLC. Is there any advice that you could give new entrepreneurs that have a great business plan and desire? You can see that it's there, but they're missing some of the steps.
Sure. First and foremost, don't give up, right? A lot of times you hear the stories about businesses that don't make it, and it can be, it can be detrimental to the thought process of, well, how do I know that I can be one of the ones to succeed? Don't give up. Two, there are resources like score.org, Service Corps of Retired Executives. They are free, free mentors, there are free courses that you can engage in, enroll with, speak with, that will help you as you go through the process of building out your business plan, trying to figure out whether or not your strategy works. Free. Small business development centers located in most major cities, several locations. They are also free as a part of the SBA, Small Business Administration, that will help you fine tune your requests as you get ready to go with profit financing, help you with your financial statements, et cetera. So take advantage of those resources that are available to you for free, and then have conversations with, as I mentioned, a variety of lenders to find your fit. So
Great. If you could leave our listeners with one takeaway about the importance of financial equity in underserved communities, what would it be?
One takeaway about financial equity. I'd say one, always reinvest in your community. That is, there's nothing bad about that approach. There's nothing wrong, and it's a beautiful thing to see people give back to the communities where they come from. Two, lending a helping hand to someone or helping improve an area. You must do that. There's never anything there's no negatives about that. Three, just get in there and do it. And don't be afraid to partner with different organizations to make the dreams happen.
That sounds great. Well, I want to thank you for your time and your insight. And, time is very valuable. And when you can come onto a podcast and give valuable information that our listeners can take on to the next step, it is definitely heartfelt gratitude from my side. So thank you for coming on.
I appreciate the opportunity. Thank you so very much. If I can ever be of a resource, please don't hesitate to reach out.
Thank you. Thank you. I appreciate that. That's a wrap on this episode of Affordable Foundations, Legacy Impact Through Housing. I hope today's conversation sparked new ideas and gave you a fresh perspective on the role we all play in creating sustainable, thriving communities. Affordable housing isn't just about buildings. It's about people, opportunity, and the legacies we leave behind. Every step we take to improve access, challenge stigmas, and drive solutions brings us closer to a future where everyone has a place to call home. Make sure to subscribe to Affordable Foundations on your favorite podcast platform and share this episode with others who are just as passionate about making a difference. Follow us on social media for more insights, updates, and stories from the field. And before we go, a special shout out to the incredible teams working on the front lines of our multifamily properties. The property managers, maintenance teams, leasing staff, and all those who make housing possible every day. Your work is the foundation of stronger communities, and we see you. We appreciate you, and we thank you. Until next time, let's keep building a legacy that lasts.